This is Alan Bush with ADMIS. In the stock index futures, we were higher in the overnight trade. However, prices very quickly falling with crude oil resuming the downtrend. Also, we do have these ongoing problems. Russia's economy seems to be imploding, and we did see a move for the Russian ruble now falling to a record low against the US dollar. So some geopolitical events putting pressure on stock index futures. However, we have seen a fairly good recovery now, almost unchanged on a day from being quite a bit lower. One thing to keep in mind, since we did see the major lows put in March of 2009, we have seen a multitude of geopolitical events that only temporarily got in the way of this bull market. And I think the situation in Russia will be the same as far as the outcome. So we are not beginning any new bear market in stock index futures with what I am seeing. Also in the foreign currencies, with the ongoing problems in Russia, there is a flight to quality bid coming into some of the currencies, especially the Japanese yen. So the yen sharply higher, but already starting to give back some of the gains, especially with stock index futures starting to recover. Also, we are seeing the British pound higher, even though we did have UK inflation numbers coming in at its lowest levels in about 10 years. Also, better prices in the euro currency with an improvement in the investor sentiment index in Germany. Also, manufacturing and services in the eurozone coming in a bit better than many analysts had anticipated, so that helping the euro currency. Getting back to the yen, even though we are higher, I think there will not be follow-through gains. Longer term, still looking for the Bank of Japan to add more stimulus next year. That would be bearish for the yen. Still looking for the Reserve Bank of Australia to lower interest rates in the first quarter of next year, and that would undermine the Australian dollar. With the Australian a little bit higher today, I would not be surprised to see a move back to lower on the day today, and look for lower longer term for the Australian dollar. And credit markets, flight to quality gains coming into treasuries across the board, especially at the long end. We now have a double top pattern in the 30-year bonds. So nothing changing in our long-term view on treasuries. Still looking for more of the same, higher prices, especially for the 30-year treasury bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.